Good afternoon, everybody, and welcome to today's edition of Ask the Experts. I can't believe I'm saying this. It is October 4th. How time flies when you're having fun. Are we having fun yet? That's the question in the markets. Amazing. Just the most incredible volatility punctuated by today's rally on the ASX 200 and last night's rally in the States. Now, so much to talk about, so much to unpack. We'll do all of this unpacking after we do the disclaimer. Oh, actually, what I need to talk about first is the Louise Bedford webinar coming up Thursday, October 6th. That's right. Is buy and hold dead? I think, if anything, the events of the last few months have told us that you can't just buy a portfolio of what you think is blue chip stocks and hold onto them forever thinking they'll go up. Dominoes anybody. So Louise has some amazing tips. She is such an experienced trader, author, you probably read her books, and mentor for so many now successful traders after they've come into contact with her. So it's just an invaluable 1 hour of you getting to really pick her brains on Thursday. There's the link. Head to the website somewhere. Actually, there's no link on there, but head to the website and go to our webinar section. And you'll be able to register. There's the link there, isn't it? www.bigmarkets.com/au/webinars. Oh, we've got the Nasdaq up front. Might as well comment on the Nasdaq given it's on its screen. Oh, tough one. I mean, look, 10,565, no surprises, right? I don't think anybody listening to me or has been listening to me for any period of time would be surprised that we've hit this level and we're seeing a little bit of a bounce. I mean, this was such a massive area of demand in the past. How do I know it was an area of demand? Well, look at this incredible 20% rally from the low. All the white candles that came in, just these invincible force. A lot of this was Amazon and Apple. I mean, two stocks really pumped and juiced the market, which then flowed through to our market, flowed through to risk-on assets everywhere. I did voice my skepticism at the time, and we did get the pullback to here. But there's every chance we rally. If you're a bear in a bear market, it is tough sometimes because, like the elastic band, you pull it too far to the downside, you do get the snapback every now and then, because every now and then we're going to get little bits of good news that come out. It's inevitable. And short covering, it doesn't even have to be buying that comes in. The big money is not, I don't think they're buying yet. I don't think there's enough has changed in the last 24 hours to say, hey, everybody, let's put the money in. That's the low, let's buy. I think quite the opposite of that. But the shorts are jittery. They're hedge funds. They want everything to happen instantly. They want to make the money on their shorts instantly. And if the market starts to rally against them, often their short covering, which means buying, can push the market up. And we can get, and then buying breeds a little bit more buying from your speculators saying, hey, that is the bottom. And maybe even some funds have to, get some money. And funds, in the day, big pension funds, the money keeps rolling in all the time. They're always on the buy side. So we get this rally probably into the pink zone here. There is a little level there at 11102. We might even pip that and get a little higher, probably towards 11.5. I'm going to be watching candles in here. So I think you're probably going to get a couple of white ones. Let's see how we respond. Rallies in bear markets, it's all about the response from the supply side. Is the supply side strong? Are they still trying to sell into those rallies? If they are, you'll get the black candles. I won't draw them now because I'm going to draw them 100 times during the session, but you know the ones I'm talking about, the black candles or the ones with the upper shadows. It's about where you're going to find them. So somewhere around here is what I'll be looking for. And then that, I think, would give us another leg down to test 10,565. And I think the next break. I mean, how many times have I told you first breaks rarely get through, or first tests rarely get through? This is the first test of 10,565. It could be the second, it could be the third one that gets through. So a bit of a roadmap going forward. I'll just very quickly do the ASX 200 because it's going to be similar themes. What are we targeting? Let's see how the demand side continues from here, if they can keep things rolling. A close above 6595, very important. I haven't actually updated for an hour, so let me do the update and see where this is going. And we're pretty close to that, aren't we? A close above 6595. We could see some legs into 6719, I think, is this sort of zone here. The old demand zone here should act as supply, and you've got that dynamic point coming. Again, watching very closely the candles in there. So we've kind of started top down. Now we'll drill down to some of the requests today. Damien got in first there with CSL. So I'll head over here. That's 360. It'll be there for a second. Fairly neutral on that one. CSL, I think, is fairly neutral on this one as well. To be fair, it's held up very well compared to the rest of the market. So, kudos to CSL exhibiting its defensive capabilities there, isn't it? And again, it's important to go sort of first instincts here, isn't it? And just say, well, what I see here, what do I see? I actually see a great deal of demand. I mean, it's kind of in this, it's very much in a trading range there, but looking back through here, this is, I think, a pretty obvious demand zone. So we've had a clear, let me just change the color of that so it's easy to see. So we've had previous points of supply. We've obviously broken through that area, and then those previous areas of supply tend to act, not always, but tend to act as points of demand going forward. And I think that's what we're seeing. So that'll be the first thing I'm seeing. The next thing I'm seeing here, I think maybe you've already spotted it there, Damien, is this is the supply zone, isn't it? So this pretty clear cut, isn't it? What we're seeing here. So you've got your POS here, your POS here. Come on, broker, work with me. There we go, POS here. And whilst we're in the middle, I don't think there's a whole lot to do. But having said that, what's pretty neat about this is that we do have some pretty clear zones to work off. So if we can close above, maybe it's this one here, you can see over here the high there, 301.55, then we're in the clear until we get to sort of a 320. That's your next major supply zone. And to the downside, if we close beneath that low there, 276, then it's the next leg down sort of stuff. And where do you go from there? Well, the demand is probably going to kick in again around about here. Okay, so short-term trend is down, but I'm not so fussed about that because actually the candles are pretty good through here, aren't they? Look at these big white candles, not a lot of response from the supply side, and today a reasonable showing. So I think firmly fixed within the range, and you don't need to do anything until it's on one side or the other of that range. I think there's actually a pretty easy TA job on this one. There is CSL. I know widely held. Lots of people want to know, if anything, what the brokers think about it. So we can see that there are 15 estimates, obviously very widely covered stock, 3 strong buys, 10 buys. Wow. Okay, you don't often see such a focused skew to the buy side there. 3 holds, no sells, no strong sells. So that's impressive in itself. The broker's average price target is 318.93, which allows 12.6% upside from the current price. But the current price might not be right; it might be yesterday's price. So just keep that in mind. What we're seeing here is data from Thomson Reuters in their Refinitiv Icon product. We get all the historical data, but we also get brokers' forecast data. And from that, I do some mathematical magic and come up with a valuation for you. So what I want to go to next is the EPS line. So EPS growth. So this is your EPS line here. You can see in terms of dollars and cents per share what CSL is expected to earn out to FY26. Again, with 15 estimates, allowing for outliers even. This is, these are the smartest minds in financial services coming up with these numbers. So I put a fair bit of faith in them, especially when I get that. And from that, I then do some of my own maths. So I can see some strong growth. I think that's the message here. We've got 18% compound annual growth rate for the next 4 years, which if you look at sort of the market average, it might be 6 or 7 around there typically. So we're talking about, almost 3 times the market average. So that is very attractive. And you shouldn't expect to see a stock with that much growth forecast. Now, whether it happens or not, that's the future, right? You shouldn't expect to be seeing the PE on a stock with that much growth around about 10 or 15, which is, again, close to the market average. What we will expect, and lo and behold, there it is, we're paying 41 times earnings for CSL because of not only the quality within the stock, and it is a high quality stock, the earnings growth that is forecast ahead. For a stock with that much growth, I actually don't think 40 is unreasonable, but I tend to look more forward than backwards. So I tend to look at the median of the broker estimates, and that's what this is here, the median of the future broker estimates. I personally, I'd pay a little bit more than 25.8. This is really holding it to a very high account. I'm happy to go low risk on CSL, and I think 6.4% is being a little bit of a wowzer on CSL. And I'm going to use a round number here, but I don't think 30 is unreasonable for CSL. And it gets us to a pretty sensible valuation, not far from the brokers. Maybe that's a bit optimistic. I think that's pretty good. And I'm happy to say that CSL's is better than fair value at this price based upon what I'd be comfortable paying for that sort of growth. Okay, and you can see what the market's paying and see what the brokers think as well. So I think this exercise is really good. It's really instructional to help you understand, well, there's charts, there are fundamentals, there are valuations, and then none of that matters, because at the end of the day, it's really all about consensus, isn't it? So if you look at my style of technical analysis, it's about understanding what supply and demand is doing. It's understanding what the market is doing, and for me, trying to meld to what the market is doing, not fight the market. My style of fundamental analysis is looking at what the market is doing, looking at what the big brokers are doing, and not trying to superimpose my views of a particular stock on top of what they think. They're the market. I can't make the market. I can think CSL is the worst company in the world, but if these guys all think it's magic and wonderful and fantastic, who cares what I think? You know what I mean? So my style of fundamental analysis is very similar to my style of technical analysis. It's very much deferring to the market, because at the end of the day, you cannot fight the market. Okay, let us change that. Oh, I'm on fire today with my transitions, and head to the next one. Thank you, Algis, for letting me know everything was working. And David, you can see no evil here. I don't know what that means. Hopefully everything's working. IGO, let's go to the next one. It's been very strong, and I've seen, you know, if you're into the sort of lithium, stick with the pure plays, and this one has done amazingly well, to be fair. It's hit the supply zone. I'm guessing from past scratchings on here. I may well have, look, I think I did call this a supply zone, given that it's drawn on the screen. So no surprises. Look, lo and behold, since then it's hit that zone, it's come back. But the good news is, well, there is a demand zone here as well, isn't it? So far, the old technical analysis here is doing a pretty good job, isn't it, of telling you where things are going to stop going up and where things are going to stop going down as well. So that's pretty handy when you've got that foresight in your toolkit, and we're just really in a zone between here and here. I think it looks really good. The fact it's coming back from these black candles, which almost could have put the lights out, I think is even better, because I think if there's a bit of selling and a bit of shorting in here, they're very much on the back foot. And it's the demand from those guys, because the trend was great anyway. I wouldn't have shorted it here, but some people get very clever and try and short things that are going up. That demand, as they cover back, could actually push it through 1526. I'm an absolute hold on this. I can't see any reason why you wouldn't hold it with a wonderful short-term trend in place. The long-term trend is really good as well. What we have got up our sleeve also, don't forget, the importance of this cannot be understated. The fact that we've actually tested. We've actually had 2 tests now, haven't we? We've had 2 tests of this supply zone. And I really want to get this through to you. You have to understand this. It's so important. So I know you're paying attention, but pay even closer attention now, because this supply zone is created by ex post regret. Ex post regret means I regret doing something after I did it. We all know what that means when it comes to investing. We have ex post regret all the time. But think about how many people had ex post regret after this high, right? They won't be beyond all want whether they got in around here or they failed to get out there. There's 2 very powerful forces at work. I got in here, right? This is my break-even point, right? I got in here. I didn't get out here. I regret not getting the best price ever. I am so belligerent. I refuse to sell IGO until I can once again get the best price ever. All right, I refuse to get out at 10, even though I got in at 5, I will only get out at 15 because that's the high. So it creates this latent supply in the system, okay? Now, this supply, we don't know how that big that is when we get there. When we're going, here we go, here we go, here we go, on this way through, here we go. Okay, and then we hit it, right? It's a little bit, no, we don't, because we don't know how much supply is in there. We can see the interaction of supply with the demand through the candles. So they're the fingerprints of supply in the market. So when we hit this zone, it might be that big. That's your first test, you pull back. And then we get up our demand side troops again, and we go hit it a second time. And we knock that much off. Well, maybe we knock that much off. Okay, and then now we're about to test it again, and this time we might knock that much off. We might have a little pullback below 15, and the next time, boom, I tell you what, that's gone. It doesn't exist anymore. We've eliminated supply, and then all we've got is blue sky up top, okay? Now we'll put that back in so that next time it's still there, okay? So we'll just put that back in. Next time it's still there, and we'll see where we go. We'll leave the scratchings on there, and we'll see how we go on this next test. Otherwise, it's an absolute hold for me on that one. Let us very quickly do the IGO. I always feel stressed out in these sessions, but I feel I take too long in education and don't do enough of the stocks and get through the list. So I try and find that balance. Hopefully it's the right balance for you. There's IGO, 13 broker estimates, 2 strong buys, 9 buys, 1 hold, 2 sells. Broker target 14.11, which is about 2%. Looking at the EPS line, I know you're all shouting at me in the comments down the bottom, but I can only see the top comments. I can't see the bottom comments. EPS current 43.5, which is amazing. Look at that, from 17.2. It's got $1.79. Ooh, lithium's coming online, everyone. Lithium cycle ending, coming back. So yes, between 43.5 and 93 is still amazing growth, net, okay? Then it comes down to, well, how do we value this thing? We said CSL with 18% should have, we said we're comfortable with 40 in here, okay, and we're comfortable with 30 in here. But I think that just kind of blows that out. That just doesn't sit well, because it's a commodity stock and there's a cycle. So if that's the case, you kind of have to jack this up, and it's still looking cheap there, but maybe that's not right. What I'm saying is it's hard for me to value this off the bat. If you're going to go down there, you might go down here. So I'm just trying to give you some permutations of how it might work out. Typically, if you can get these permutations at the current price, you're probably pretty close, okay? But it's a tough one. How do you value these commodity stocks that are cycling these huge earnings? That was the message there. Apologies for not flicking the screen over in time, and thank you if you have shouted at me in the list. Okay, I promise I will get through these. BIS. Let's have a quick look at this. It still looks good for Algis. I know Algis, we looked at this not long ago, so I'm not going to spend too much time on it. The good news is ditto. Nothing's really changed from my last analysis. You can see higher peaks and troughs. We talked about what is good price action. And remember, this is what we call good price. In fact, well, this is not good. This is great price action. Well, that's fantastic. Where your last trough, right? So let's call this T0, is at or above your second from last peak. And we call that P1 because that will be P0. So anytime, let's say we are here, so X marks the spot. This is today, right? So this is today. When you're looking back and you can see that your last trough is at or above your second from last peak, this is what we call great price action, okay? What is not great price action is this one. Not great price action, okay, is where it's really overlapping. We've all been in these stocks. We all know how that feels. We know how lousy this feels. We know how good this feels. So go for the good feeling, okay? You want to feel good with your investments. Try and find stocks that have good price action like this one. Nothing too sinister in the candles just yet. Algis, and don't forget, the market has been terrible. And what I very rarely talk about, because only until I started using the new software, you can actually see it on my screen, is this indicator down here. Now, this you won't find on any other trading platforms. This is my own custom indicator. I built this many years ago. And what it does is it compares this performance, okay, based upon the stuff I like to look at, against the ASX 200. So we are seeing, when it's green, how the stock is outperforming the ASX 200 over the last 3 months. And when it is red, it is underperforming the ASX 200. So we can see that we've got just massive. If I ran a report to find stocks that are outperforming the market the most, this no doubt would probably be very close to the top of this. It'd be top 1%, I'd say. So I'm just happy with that one. My views continue to hold. TIE. Okay, so here's the deal, King, with volume. Volume without price action is, I wouldn't say useless, but there's not a lot of information in there. So we want to see the volume and the price action working together to give us information. So volume, lots of volume equals lots of buying and selling. Don't forget, if I sell you 10,000 shares, right, 10,000 shares goes on the volume, but you thought you wanted out. You didn't want to be in the stock anymore. No, when I sold you, so I wanted out. I didn't want to be in the stock anymore, and you wanted in. Okay, well, it's wonderful you wanted in, but why did I want out? Okay, so don't just go, oh, lots of volume means lots of buying. No, that's rubbish. Lots of volume means lots of buying, lots of selling. So often you'll hear this bubkas. It is absolute rubbish. And it's been written in technical analysis books since the first technical analysis book was written. Oh, you want to see your stock going up on strong and increasing volume. Sorry, that is absolutely incorrect. In fact, it's the opposite. You want to see your stock go up on as little volume as possible and that volume decrease if possible. I'm not even going to tell you why today, because to tell you why would be too simple. Okay, to tell you why wouldn't challenge you to think about why this long-held tenet of technical analysis is wrong. In fact, the opposite of what you want. So I'm going to tell you a stock going up on high and increasing volume is the opposite of what you want. I'm going to tell you a stock going up on low and decreasing volume is actually what you want. And it's your homework to think about why that's the case. Okay, I tell you what, once I realized that that was rubbish from my own observations of the market after many, many years of doing technical analysis and investing, I tell you what, my investing certainly went to a different level. Now, we digress a little bit. We talk about volume and price action. So we've got this huge movement in price. Okay, so we can see that the sellers, there are still sellers in the system, but they are doing it at higher and higher levels. They're getting out of the way of the demand in the system. So I know there's lots of demand because there's lots of volume, right? But I know there was also lots of supply to meet that. But who was winning the battle? Who was like two armies going at it, and who's gaining the ground? And that's where the price action tells me what's happening in the volume or the value of the volume. So we can see that lots of demand came in, and there was lots of supply. The supply was running away. So this is good. When you see this huge volume here, it is showing that supply is running away, and you need supply to run away if you want the stock to go up. It's also showing that we're removing a lot of supply. Now, you can't look inside the candle, but I wonder, sort of where the supply came out. You need to get rid of supply for a stock to go up. Think about that statement. You need to get rid of supply. There's supply. Supply is ubiquitous. There's always supply, and supply is often stimulated by price. That's the oldest, again, economic tenet: supply, demand, price, and higher prices stimulate supply. So we have achieved higher prices, and supply still running away. That's very important. But the other thing is we're removing supply. You need to get them out of the market, because when you remove supply, they become cash, right? By definition, if you get people who own shares out of those shares, they have to have been given money. Okay, and that's good for you, because if the price keeps going up, they all regret. Again, there's that ex post regret. They regret getting out, and that's good for you because they've got money now, and many of them will want to buy back in, fearing, oh no, I can't believe I got out of Tietto at the bottom, and now there's this wonderful announcement. Whatever it is, I don't know what it is. I don't care. I'm a technical analyst. All right. All of those are fundamentals. They're just noise. I just want to know how the market responds to it. Okay. Oh no, I got out at the bottom. Oh, well, I've got all this cash now. And, if it is good, I'll get back in. I'm a hold on this one. Looks very strong last two candles. This candle, today's more important than yesterday, King, because you want to see today finish well. Yes, this is a good start, but if it all flames out the next day, people are going to lose faith real quick. So let's see a strong close today. You've got some supply up here. Okay, that's important. Okay, we're going to need to do that process of testing that supply, getting rid of it, feeling it out, seeing how much supply is there, and the candles will tell you. The candles will tell you, okay, this is where I'm going to draw the candles. I promised I'm going to draw them today 100 times. So the candle that looks like that is a good one. The candle that also looks like that is a good one. So let the long-suffering people that have suffered through me for many, many months now, you know what I'm going to do next. I'm going to do this, and I'm going to do this, and these are the key demand side candles. Okay, repetition is the mother of all learning, everyone. That's why I keep drawing them every week. They're the candles you want to see here. Now, if you don't see those candles here, King, if you see this candle, all right, or this candle, okay, that's supply. They are the fingerprints of supply. Ooh, and just look at that. Just leave them there. That completely changes the dynamic of this rally here, these two candles. Imagine if you saw those there and what the ramifications of that would be. Hopefully, each chart we do, each chart we share here in these sessions is just tuning your eye in to what you need to know. I won't do Tietto on the fundamentals because I don't think it's going to have any broker coverage. Anthony's asking about the XJO, which we've done, wonderful, and the S&P 500. I'll give you the 30-second wrap on that one because I fear it's going to be very similar to the Nasdaq. It did hit a level. I was going to say it cracked 36.36, but there was this old level here. Look at that. Look at this, everyone. And technical analysis, it's like, driving a car, looking in the rear view mirror. Yeah, I've heard that one before, but look at this. This is the high. This was the high from August, whatever it is, a significant high post-GFC, post-pandemic. And we spent a lot of time testing. Look at that, testing, first test, rarely get through. Here's your key learning for today. First tests are rarely successful, okay? Often it's the second, or third even, that get through the supply. Was there supply there? Of course there was supply there. Look at the supply there. Okay, but the other thing is that the old points of supply we know tend to act as points of demand going forward. And lo and behold, stay there. Lo and behold, if I extend this out, and look, Amy Broker does have some redeeming features, doesn't it? There we go. Look at that, bang on, bang on. Now, why does it work? Because there are funds out there that trade off these principles, okay? And they want to cover their shorts at some of these levels. Not because they think that this is the beginning of the next bull market. I doubt anybody thinks that. But they know that if there's a rally, they can get set on those shorts again at a better price. Where could they get set on those shorts at a better price? I'd be really watching sort of this zone very carefully through around about here. And again, the candles in there, we talked about which ones you want to see for the bear case to see it come back down again. But I think we've got a couple of days rally here, okay? But a couple of days rally does not a bull market make. Let us go back to the stocks now and look at MTO, Motorcycle Holdings. Okay, this one is for Chris. Good fundamentals, Chris. That's nice to hear. I don't really care, but I'm glad it does have those good fundamentals. The chart is a buy, he's telling me. I'm not sure if I agree with that. Now, this is not the worst chart on the planet. Let me give it a score out of 10 for you, Chris. I reckon it is a solid 5.5 out of 10, okay? If you want to buy a 5.5 out of 10, go for it. But you can see there, it's not a 0 out of 10, is it? It is on the better side of demand than supply. I am concerned a little bit about the severity of the supply here, because we can see some pretty motivated supply side candles. What it does have going for it, Chris, and this is just in keeping with this what we've talked about today, is we've actually done a test, haven't we? We've done that first test. This is not a great candle through here, but we seem to have regrouped pretty well. So we're kind of coming in for a second test. You know, I think the demand side is responding pretty well to this point here, and we are building. So much so, the short-term trend is up. Yes, definitely respect that. That's why we're at 5.5 out of 10 and not at 2.5 out of 10. The long-term trend is the major issue. So we're kind of at what I call static. So there you go. This is a static, not a satanic, but a static point of supply. Why is it static? This point of supply ain't going anywhere. This point of supply, which is at the exact number of 265, will be at 265 for the history, rest of the future history of mankind. It's static. Now, my dynamic zones, they're based upon my moving averages. They're moving. And we find that on the way up, lo and behold, on the way up, and hey, who's to say it's not for me to say that they're good, okay? But you know, I know they're good. On the way up, they tend to support prices, and then on the way down, once we break through them, it tends to resist prices almost perfectly, more often than not. So here we are. So we're dealing with the static supply and the dynamic supply. We should not expect it to get straight through, should we, Chris? And that's probably why we are doing some work here. And I think it's okay. So look, a solid, it's a very warm one. I wouldn't say this is a hot chart. It's a warm chart, and I could entertain this. I could get more enthusiastic on it if it obviously breaks through here nicely with some nice candles. The only problem is, and this is why it's not scoring so highly, is I think there's going to be some supply here from this zone where a lot of demand got in. How do I know a lot of demand got in? You know, look at the work it did here. People buying here, not believing that the trend has changed. And down here, they feel pretty horrible. They want to get out. That's their break-even zone. And then you've got sort of this level, and this level. And that's why it's 5.5 out of 10. I just think it's kind of putting itself in that too hard basket. But if you tell me the fundamentals are good, well, that changes everything. Sarcasm doesn't change anything. And watch me do this, everyone. Look at that. Okay, Motorcycle Holdings. 4 estimates. So let's take these estimates with a pinch of salt. We've only got 4. We're not 14. We're not 15 like IGO and CSL. But 4's not bad. EPS, we're coming down on our EPS. So we've got 46.7 COVID peak. Right, everybody got cash splashes and nothing else to do with their time. So instead of staying at home and pretending they're doing work, they jumped on their motorbike and went for a ride. Fair enough too. So we're cycling that bump, and then we're not actually seeing a lot of growth, to be honest, even after that, because maybe we're going into a recession. And this is, I don't know, Motorcycle Holdings, maybe it's a very discretionary item. I don't know enough about the business, but what I can tell you is my view is irrelevant. I'm absolutely certain about that. My view doesn't matter. And I'm sure these 4 estimates here, they didn't just go, hey, I'm looking at estimates like I do, because that's my style, remember. I mean, I can go break down a company. I know how to do that. I do it from time to time. But these guys did break down the company. So I'm going to use their collective wisdom and say, well, 5%, negative 5% compound annual growth rate out to FY25 is not great. In fact, it's pretty terrible. So what would I pay for that? Well, I wouldn't pay very much. I certainly wouldn't pay 20, and the market's only paying 6 or 7s. So if we go with the market view, it probably looks pretty expensive, and I think that's rubbish, because what you find is that a lot of brokers, they don't like to drop their price targets when things go down. They're very slow to do that. They keep raising them on the way up, but then they don't drop them on the way down because they don't want to admit they're wrong. That's just my view. Whether that is true or not, who knows? So I don't think it's looking particularly cheap here because the growth is pretty awful, even though it has a low PE. It's not something I'd be gravitating towards naturally. Okay, let us head back to here, changing the screens. Thank you, Dave, for confirming that everything was working before. James is saying, hey, Carl, just to mix it up, what is your current top buy stock today? I haven't done my scan yet, James, and there's a good reason why I haven't done my scan is because, let me click update, because we will get the update for the hour. What you can't see is I've got my updater going over here somewhere. And it's going to give us the latest update. So today's a light candle. So really, I like to do my scans late in the day, James. So after 3 p.m. Eastern time, whatever it is my time, that's when I start to look at stocks, because I know I've got a great deal of certainty with respect to the close. Okay, so I like to do my scans towards the end of the day, and if I'm going to trade, I'll put a trade on, in the last few minutes of trading or going to the closing price auction. So that's typically when I'm doing my work, or it might be right at the beginning of the next day, but never in the middle of the day. So I don't need to do a scan now, so I can't actually answer the question. But if I were to do the scan, I would go into here, I'd go into new analysis, I'd go into my various formulas here, which you can see on screen, one of them, which is my long scan, and then I'd select my filter on here, and I'd go into, I actually wouldn't go watch this, I'd go market, because I want to scan every stock. It's customary for me to scan every single stock on the ASX. Obviously, I need to set this to today because I haven't done one for this week, and hit explore, and it would go off, and based upon my criteria, do that. This is Amy Broker. I don't get paid for this, for endorsing this, and I'm not really endorsing it. There's plenty of them out there. It's just the one I like to use because I've got a formula language which I can program the stuff I like into it, and all my ribbons and stuff as well. I'm trying to answer your question here, James, and what would be the top one? Well, it'll be something from this list. Again, maybe I'll look, for your benefit, I'll put a tweet out today. So I'm very careful about my tweets now, and whether I put out my a list of longs, because I'm just not feeling that way about the market. So I don't want to put out a list of longs and have people buy stuff and then get belted by the bear market. And anyway, you can see the list. It'll be something in there. And okay, let's do one further step because it's possibly instructional. Let me erase those, and I will store these. So I go add all results to my watch list, which is in here, or scan results, and then I go into, damn it, that one, and I start looking through. Okay, James, you got me. Let's have a quick look, everybody. We're going to scan this. Maybe this is more valuable than answering your questions. 5.5 out of 10. It looks half decent. I called this a specky buy, didn't I? A cheeky buy. It hasn't really followed through. No, look, it's probably better than 5. I'm going to go 6.5 out of 10, okay, as a cheeky buy there. That one is not good at all. I don't like that one. And you go, well, why is that on the list then? Because it's not in two matching downtrends. So this is a very broad list, okay? That's the thing you have to understand, is because I don't want to miss anything. It's a very broad list. So I'm not necessarily looking for stocks in double uptrends. I'm looking for stocks that aren't in double downtrends. Okay, think about that. A little counterintuitive. But you might say, oh, that's going to give you too many stocks. Yeah, but I go through them this fast. Right? So it doesn't make any difference to me because my brain is tuned into what I want to see. So I'm looking for pictures here. So this is just pattern recognition, picture recognition. So that looks, half decent, 6 out of 10. No. Look, I'd keep an eye on that. Needs to do a little bit more work. So A2Milk for long sufferers. I know Easton, you were asking about this. This is actually looking half decent here, and it's still outperforming the market. Certainly a hold for me. but it could actually start to look very good. This is definitely a hold. I'm not sure if I'm a buy today, but that looks very, very good. That's sort of your, 7.5, 8 out of 10. That also is very good. Allkem there, 50-50 on that one. Not interested in that one, not interested in that one, not interested in that one, not interested in that one. Sorry if I'm skipping over your stock that you're interested in, but I'm not interested in them. Why would I spend any more time than I need to? There's Bisalloy. We've talked about that today. Looks great. One of the best looking stocks in the market. I think Brickworks looks pretty good. 6.5 out of 10, not 10 out of 10, but, half decent there. We've got a bunch of scratchings on this one, so let me delete those. Maybe I'm answering some questions down the list. Boss Energy, look, absolutely can get to a hold. Whether I'm a buy, look, it's not bad. I mean, the candles off the long-term demand zone aren't terrible, but it's just this huge wall of supply here. But we have tested it once, so that's a good as well. 6, 7 out of 10 probably. No, pass. Computer shares okay. It's a hold. I'm not sure if it's a buy again. I should draw that big supply zone at the top. Keep moving. This one looks very interesting. I like these candles, and it's very close to this supply zone, and we've tested it. Looks interesting. I'm not sure if I'm a buyer, but it's certainly one I would keep a very close eye on. No, yes. That's the best looking thing I've seen today. Now, don't forget, today's candle is still live, okay? And there was some sketchy stuff before that, so you want to see a strong close. The volume is there to tell us we've removed supply, so that needs a strong close, but it looks very interesting. Totally specky bet though. De Grey, no, pass for me. Pass. Oh, that's interesting. Yeah, looks very interesting. Looks very interesting. There's a lot of work it still needs to do, but you can kind of see the high peaks, high troughs, the candles, the trend may be changing, but there's still a lot of work to do on that one. It's just kind of give you an idea of the ones that are catching my eye. Deep yellow, I'm going to put in the too hard basket, maybe rally from there. No. Or specky, pure spec, would need to close better than that today, I think, to really get my attention. But yeah, 6 or 7 out of 10 probably. No. Gold metal securities, no, it's gold. I don't like gold by default. No, gold. No, pass. Too hard. What's that? Fuel. Oh, that's the energy sector. Yeah, look, it's coming back. Look, it's coming back, but it's not a yes. Not terrible, but I don't think I'm into that one. I called this. I don't know if you remember. I called this. I said it will not go higher than that. I think it was after this day. Go back, check the tapes. I said it will not trade above there ever again. I think I was pretty close on that one. Galileo. No, too much damage done here. Pass. Pass. Too hard. No, thanks. No. Oh, too hard. Oh, there's IGO. That looks good. I still like that one. No. This is good. I like this one, IPH. I think that's very solid. That's very solid in such a horrible market. There's your relative strength here. Look how good that is. Very solid. We're on the highs. This is going to take too long, everybody. But yeah, look, you kind of get the picture. Right, let me get back to the list. Hopefully that was instructional for you, James, and other people aren't changing. Change screen. Thanks, Barry. Well done. Never too much education, says Chris. Oh, good. I appreciate that. IGO fundamentals not showing. Thanks for yes. Thanks for everybody screaming at the screen for me. BGL, how are we going on time? Yeah, I'd say time flies when you're having fun. I do. Hopefully, you can see that I thoroughly enjoy these. There's nothing I'd rather do, honestly, on Tuesdays at this time. I'd look forward to Ask the Experts. But time flies. Let me get through these. BGL. Why is it not coming up? Oh, because I'm in the scan list. Let me go back to here and try again. BGL. There it is. Hey, you know what? We can do this one pretty quickly, can't we, Carlo? Because you saw me going through that list. Do you reckon I would have stopped on this one? No, I would have gone straight past it. Too hard basket. Long-term trend is down. Short-term trend is just not there yet. Yeah, we're getting a bit of a rally, but 4 out of 10 on this one. There's supply everywhere. There's supply all the way up, and I could be wrong. And this is where I cover my backside, everybody. You've seen me do this before. Okay, 3 scenarios. 3 scenarios here, right? This is scenario A, this is scenario B, and this is scenario C, okay? Now, I reckon B or C are the most likely outcomes here, okay? And if I had to give them weightings, I'm going to say, well, I'm actually going to go 40, 20, all right? And what does that leave? Oh, no, that can't be right, because I don't think there's 40 up here. So let's Let's scratch that one. Let's go 40 here, which leaves 20 up here. So it is possible that this one just magically, mysteriously goes up to $1.10 in scenario A. But I just don't think the probabilities are there. I think that 80% of the probability is sideways to down. Okay, so, this seems flippant, doesn't it? It seems flippant. But I put to you, if you had done this most basic flippant analysis on every stock you've ever owned, okay, it would have actually guided you. I think it is being honest, isn't it, about your holding, rather than you being optimistic and saying, well, A's bound to happen because Belleview Gold is the best stock in the world. That's what you think. What does the market think? Always ask yourself, what does the market think? Let us look at the fundamentals for Bellevue Gold. We don't have a lot of brokers, but the ones that are there are buying it. So one buy, there we go. One strong buy, three buys. Their price target is astronomically high. And this really gets back to what I said about brokers. They ratchet their targets up on the way up and they don't ratchet them down again. I don't have a lot of data here. It's not going to earn any money this year or next. And then after that, whatever mine they're getting close to fruition will come into play. And it does look like some pretty solid earnings growth from there, but there's just not enough data in here for me to give you anything sensible. I think, even if I go to there, full credit to my spreadsheet for actually being able to do that. Yeah, look, maybe it is. Well, I don't think it's. I mean, you can't. There's still execution risk. I'm going to do that by default, but this is very low. I mean, I think you could go 9 here. So if you went, say, 9 on that, it's not. Yeah, look, I reckon it's cheap. I reckon, based on my very rudimentary scratchings there, I think the stock does look cheap if these 4 brokers are right. But you've got to remember, these 4 brokers, they are the most optimistic brokers in the world. We've all had these brokers before, haven't we? One of them, I bet you, floated this company. Yeah, one of them probably did a placement for them. You know what I mean? Now, they're completely anonymous, so none of them can say that I'm accusing them. So I better not get sued. But I think you know what I mean by that. So these estimates, I think just be a little bit careful. But if those estimates turn out to be accurate, then it's probably cheap. But you have to go high because we have to start at FY24 to get any numbers. So that just means execution risk to me. And maybe that's what the market's worried about. Okay, let us keep moving. We have changes of screen. Thank you, King. Novonix on Eastern. Oh, I haven't looked at Novonix for a while, Eastern. And I'll tell you what, Novonix is a stock I want to own. Let me put that out there. It went gangbusters, and I was all over it, my tweets. I don't think I missed that one. And then we got this, tweeted. And then I told you it was, I said, much like a Galileo, I said, that's it. I said here, that's it. It's all done. Nothing to see here. We're finished. Okay. Novonix is done. Okay. And I think that was a pretty accurate call. But I like the business. Now, I liked it all the way up. I liked it all the way down, but I wouldn't buy it because of the chart. But it's a stock I want to own at some stage. So I am watching this very, very closely. The other one I want to own at some stage is M&S in that space. Another one I want to own, I'm going off topic here, but I think this one, these are stocks I've done the research on in the past for the call and various apprentices of the call. And I've done that research because I do a deep dive on them. I've liked them. I've really, really liked them, but I can't buy them because of the charts. And Dubber has looked pretty good through there. They're just, I'm getting off topic, but Novonix, it's not one to own. I just don't want to own it yet, and I won't own it. I'm happy to give this $2 to the upside before I do own it, just so I'm sure that the new uptrend has begun, because who knows where this is going to end. Off the top of my head, I think it's still $1 billion company that's not making any money, so it needs to rectify that. I don't think I need to say a whole lot more on the chart because it's certainly not a buy. I am curious. I haven't looked at this for a while. And because it is a company I am personally very interested in, I'm going to see what the brokers are doing, because they're always updating. They're always updating their numbers on this. Change the screen. There we go. Retrieving. Hopefully, Thomson Reuters hasn't conked out on me. That might be an issue for us. Oh, there it is. Okay. So we see this. We only got one. We've only got one broker on file on this one, so I'm not going to go any further. There's no point. See, not even. So we look at this, Eastern, not expecting to earn money until FY26, 60 times that year's earnings, which isn't bad for a growth stock, but it's too hard. It's too hard for me to look at this and say, oh, well, I think it's cheap or expensive. You're just not going to get that out of a stock that's got so much work to do to get to earnings. But thank you for the request, but I think it's a really interesting company. Let's now have a look from David, wants to look at Whitehaven. Actually, I need to do BHP for an offline request as well. And that's it. So I can do Whitehaven, and then I'll do BHP afterwards. So let's go WHC. Oh, magic. Oh, look, I'm wrong. Look, I got this wrong, didn't I? Not this bit, because I did say here minus 1/3. Well, there you go. Okay, well, I got that wrong. So if I caused you to sell 1/3 of your holdings, I apologise. Not really. I don't apologise, because the signal there was supply, and it was a significant supply event, in my opinion. And somebody tweeted back at me and said, hey, Carl, I don't think it's a significant supply event. Well, whoop-de-doo to you, and congratulations, because you were correct, okay? And that's the market, isn't it? People have different opinions. And if you held on, well done, you've got your full position. But if you didn't hold on, you sold 1/3 like I suggested, well, you've still got 2/3 and you're still pretty happy. Hey, nothing was stopping you, and nothing is stopping you from buying that third back in today, or even adding some more if you want. Because this is, we talked about scores, didn't we? We talked about scores, and everybody who has, let's face it, dished me up rubbish today, all right? This is the stuff you want. And I'm being facetious, aren't I? I don't expect you to give me 10 out of 10s all the time, because in this market, they don't exist. I mean, there's Whitehaven, and probably its buddy, NewHope. All right, there you go. Surprise, surprise. And if I told you, I didn't tell you to do the third, I would have drawn some candles, say, if these candles occur, then do the second, third. Did I? Oh, maybe not. I can't remember. Anyway, you would still definitely have some. This one is not sinister enough. Definitely a third here. I'm not sure what the second one is drawn there, but you can shout at your screen. I can't hear you. It still looks amazing. 10 out of 10 on that one as well. Let's go to the other Musketeer. That's interesting. Why isn't that going up? That's interesting. Okay, so look at that. That's important. That one's not going up. Okay, so just be a little bit more nervous on this one, a little bit more circumspect, a little bit more vigilant on Terracom than the other two. There's a reason why it's not being favoured. And the other one is still looking very good, is Yancoal. So definitely a hold on that, and maybe even a little cheeky buy there for moving back to the top of that range at $7. That's looking pretty good. No doubt would have been on my scan results. We just didn't get. There you go, Yancoal on the scan results, as is Whitehaven. There you go, as is no doubt NewHope. We only got to the eyes, remember? We didn't get all the way down. So we've just gone back to my scan results there from my long scan. Very happy with that one. Now let us go to BHP, because that was a request offline. We've got plenty of scratchings on this. Look, full credit to BHP. This is one which I expected, given what's going on in the world, would be significantly lower. And I think there's a couple of reasons why it's not where I think it should be. And that is because the dollar has collapsed. Okay, so that is giving it a significant buffer against lower growth expectations. And also you do have some nuts out there that say, well, there's lots of inflation, so I need to buy commodity stocks. Yeah, well, that works to a certain extent. It works until we're in a recession, and then commodity stocks are the ones that get hit harder than anything else. So I can go hold on that one. I have been on a sell bias up to this point, but I can probably go back to a hold. I don't think it's a buy. I mean, there's not enough going on there for a buy. I think we can all agree on that. But it looks half decent. Dare I look at these? I find it very hard to value these commodity stocks, because as we're going to see in a second, I won't do Whitehaven. We've done that so many times. I don't think we need to do it again. But I think it's overvalued. I think BHP is expensive. That's my view. Damn it. That's my view. Let's pick that up. That's my view. I think BHP is expensive. Moderate, 12, 34.89. That's how I would view BHP. What do the brokers think? 17 estimates. So this one I think is rock solid. Let's face it. You've got the brightest fundamental analysts out there contributing to this. 2 strong buys. That's curious. 7 buys. 11 holds. This just doesn't seem right to me. Something's wrong with that picture, because you've got this huge drop in earnings. That was the nearly half earnings I was talking about. FY26, $3.22 versus current, minus, what did I say, 11? It's 14 now. I don't know how that changed. I must have clicked a different button. And yeah, I think it's expensive here. That's my view. Let me go back here and keep moving, mindful of the time. I'm going to stop doing fundamentals, but I'm going to fast forward from here From Dave, Whitehaven, $10. I just want to just check where we are in relation to 10. Well, I do think it's going to have some trouble at 10, everyone. I think it's worth mentioning. I would bang some out at 10 only for the reason that it's 10. Okay, and again, not the whole thing, a third at 10 at the most. And you go, oh no, Carl, I'm going to hang on. Well, that's your view. I think you'll see a little bit of supply at 10. It's got such a good run up to get there. That's the only thing. It's got such a good run up to get to 10. It's not like 10's a surprise. I mean, we stopped at 9. Yeah, I reckon I'd still sell just a few there. It's a big round number. And then with a view to buying it back, pull back. Okay, how do I access the recording of my previous sessions? Get to YouTube, Head to YouTube. Think Markets on YouTube. That's where all the recordings are. NHC, I think you mean Anthony, and buy on both. Buy. So Anthony's saying Whitehaven and NHP. No, NHC, I reckon is what he means. Buy, hold, or sell, buy. Unequivocally, 10 out of 10. From Anthony, hi Kyle, your thoughts on Sayona mining? It had taken a little bit of a beating, isn't it? It was looking good before, and this is obviously market getting belted, and the smaller ones. So if we look at Sayona, this is something I noticed. Look at that. Why are you thinking? When has thinking with respect to investments ever helped you out? Just do what the market tells you to do. Okay, what is the market thinking? Well, look at that. So there's definitely, this is no coincidence, right? Sayona, Core, Liontown, they're all in the basket. And then you've got your producers like Allkem doing better. Well, that did pull back as well. And Pilbara is the strongest. Pilbara is still the best. Pilbara is the best. No, hands down, Pilbara is the top lithium pick on the ASX. The question is about Sayona, and I think it's worth a hold here, Anthony, on the basis that today's candle, should it close there, and it would need to close here or better, I think is giving you some confidence that we're going to see some high prices ahead. There is a bunch of supply. I mean, geez, Louise, it's got supply written all over it, hasn't it? I mean, the candle there, this confirmation here, it was just weak as water, wasn't it, on the demand side? The question here is, where was the demand? Where were all your buddies, Anthony? They weren't there buying the stock. Why weren't you there? Hold. The shadows, long-term trend zone. This is all good stuff here. So I'm happy to hold it. What's it going to do here? I don't know. What's it going to do there? Hold and watch. From Andrew this time, QXR. Oh, this one's not ringing any bells. Oh, QX Resources. Yeah, no, I know this one. Looks great. I would hold on to it. I'm not too fussed about these two candles because this is so motive. This is motive as in moving. Yeah, I'm a hold there. I'd almost go cheeky buy even. On your next white candle, I'd say buy. I'd say on your next white candle that looks like this, I would buy this thing, and it may never happen, but yeah, something that looks like this or the other one, I like to see, that would be sufficient for me to buy this one. So something like that, absolutely looks very interesting. I like the way it's building, and I like the way it's turning around. I know there's going to be supply. You're all shouting at the screen, "Hey, Carl, what about all that supply? You keep talking about supply. It's miles away." Yeah, if I get in around here, right, let me just draw it with a color. If I get in around about here, right, and I set my stop loss, where would I set it? Or somewhere around here. Yep, I've got better than 1-to-1. I've easily got better than 1-to-1, don't I? So let's go here, and if that's my upside, and just changing colors here, this is my downside, depending on where I get in. Yeah, definitely 1-to-1. So I'm okay with that. EFE. This is very interesting. We looked at this one, didn't we? You came up on my list, Andrew. There you go. It's now at 4.1. If it closes there, I'd buy it. And again, it's a pure specky buy. So don't put your super fund on it. And remember, we just saw a chart. Not on that one. Not on that one. It was the one with the cash weighting, 80% cash and 10% for cheeky longs, 10% for cheeky shorts, So if I'm looking for cheeky longs today, this is a cheeky, it's a cheeky long. The other one, the QXR, they're cheeky longs. Yeah, but I'm not betting the super fund on these things. Doug saying, I need to do 2 sessions for a week. I know I do, and I will do them strictly for Think Markets clients. We are planning on doing that for clients only. Terracom is being sold off by Credit Suisse, says Andrew. Okay. He's saying he still thinks it's a buy, but it will eventually have to break its current consolidated level. Of course, it needs to kick up to be a buy. And I'm on the last one here, Audinate. We did say this, didn't we? We did look at this one. And then, there's your lower supply zone there, and really somewhere around here, but 100% there. So this is, I know we're hindsight stuff, but you need to be able to identify. We said a third for $10. There you go. Look at that. And don't forget, this was for no reason. I said no reason but $10. I said it in advance. And that's why I'm being cautious on Whitehaven at 10. And then you got your lower peak, so you're building supply. I know you've seen me do this pattern a million times, haven't you? And funny enough, I've done it a million times, and you keep seeing it happening, don't you? And this one here, this is your minus third, isn't it? So we did a minus third for that. You go minus third here. And then, I don't know, where's your next excuse? I mean, you're not giving it a lot of leeway from there, is it? Maybe it's this candle here, but bottom line is you're not in it. Do we buy it back? Is there any reason to buy it back? Give it a score out of 10, 2 out of 10. So that probably answers your question there for you, Dave. Audinate, could the last few days of flat action mean get ready for a rally? Oh, okay. I'm sure Dave's out. No, I don't think so. I think I've answered that question. Look, they're not bad candles, are they? They're not bad candles. Underperforming the market, though. So, yeah. Answer no, I don't think so. Gut says no, head says no. I'm going to go no on that one. Ask the experts if you didn't get your question answered. I know I did answer everybody's question, but if you're watching me on the recording, I should say, come and join me live next week, Tuesdays, 1 p.m. There's a link to register. We have lots of fun, and you learn lots. There I am. Why Think Markets? Hey, if you're not a client of Think Markets, you should be. We are the good guys in the Australian and broking scene. If you want to trade shares, hey, we do that. Chair-sponsored $8 flat rate. If you want to trade CFDs, that is, you want to go long and short as well in the bear market, trade commodities, futures, crypto. We didn't look at many commodities today, did we? Have a look at wheat. That chart is starting to look very interesting. You can do that with us as well. You have your self-managed super fund over here. You've got your CFD trading account over here. You can do all your hedging and all the cool stuff with us in the same platform. Well, different accounts within the same platform. We are an award-winning broker. We haven't just been around for 5 minutes, been around for many, many years. We are regulated in over 6 or 7 jurisdictions all around the world. So in the UK, in the US, in Japan, we've just opened an office in Japan. And of course, Melbourne here in Australia, we do have an ASIC license as well. So reliable, trustworthy, that's us. All the good stuff, isn't it? If you're watching me on YouTube, hit the subscribe button to stay notified of all of my future video updates, and hit the like button to let me know you like what I'm doing, so I'll continue to do it. Apart from that, it has been a pleasure chatting with you today. Hopefully you enjoyed the session. I certainly did. All the best for your investing. Till we catch up again. Bye-bye for now.